Hello, everyone. Welcome to the Safe House, brought to you by the Safe House Initiative. I'm Jeff Edwards, co-chair of the Safe House Initiative, and your host for today's podcast. Risk management is a very broad subject, and it encompasses cybersecurity and how to mitigate that through cyber insurance. And sometimes people narrowly define risk management with something as simple as a cyber insurance policy, and it's far from that. And today, to talk about a much more holistic view of all the intricacies and all the levers that exist, and different types of aspects you have to consider for risk management, we have AJ Dharma Wardana with us today, and she's a portfolio manager at Envelop Risk. AJ, welcome to the Safe House.
Great. Thanks, Jeff. Thanks for having me.
Yeah, no, I'm really pleased. So you didn't just yesterday become a portfolio manager at Envelop Risk, I would guess. And if you would introduce yourself to the audience, since this is your first time, I'm
Mhm.
glad to have you here. So why don't you introduce yourself, kind of talk about your journey to where you are today?
Sure. Yeah. So I'm sitting here in Hamilton, Bermuda, which is the
Hmm.
catastrophic reinsurance capital of the world. And it's been almost a 20-year journey to get to where I am today.
Wow.
It started, yeah, about almost 20 years ago when I was in Toronto, Canada, in the School of Engineering at U of T.
Hmm.
And I think the first week they handed us like a yellow hard hat. And that made me think, okay, how do I like where do I see myself working? Is it in a power plant or in a mining company? And then
Yeah.
I think that first year I was just kind of like thinking about it, what's right for me. And I heard about this. I wanted something still qualitative and quantitative rather, but I also wanted something more on the finance side. So I heard about this discipline called actuarial science. And
Hmm.
for those of you that might not have heard of it, actuarial science it's the study of risk management and probability, and it uses math and statistics to assess risk. So I completed my undergrad in actuarial science and
Hmm.
then, started my career working in a pensions company. And again, actuarial science is very, very broad. The study of risk is, obviously pervasive around the world. So you see actuaries employed in pension companies, you
Hmm.
see them in health insurance companies and life insurance. They're the ones that will calculate, probability of death and when you might die.
Yeah.
So yeah, it was again a series of like little pivots to find, okay, what specific area of actuarial science would be interesting and right for me. So I started
Yeah.
in pensions and then kind of got into just general insurance. So working on kind of auto insurance policies. And then I started hearing about this thing called reinsurance. And so reinsurance is when
Yeah.
an insurance company transfers some of the risk to another insurance company.
Huh.
And typically, when you think of reinsurance, usually the insurance companies that need to buy reinsurance, they're generally protecting themselves against kind of big events. So you
Huh.
think of hurricanes or wildfire or big cyber security attacks that impact, multiple companies. That's where a lot of the, property and casualty reinsurance companies provide a lot of benefit.
Sure.
So I thought, oh wow, that sounds pretty cool, like learning
Yeah.
about hurricanes, and a lot of these big risks have a lot of complicated and fun, interesting modeling that happens to kind of simulate all these kind of events. And that's what kind of I heard about that. And then again, Bermuda is one of the reinsurance capitals of the world. So
Huh.
I was fortunate enough to, move here about 13 years ago, and work in probably one of the top reinsurance companies at the time, Validus Reinsurance. And I got to see all sorts of, different ways to quantify risk. So, how they built hurricane models and then how you come up with the price for the reinsurance policy and, all of those kind of interesting things. I worked on space. I worked on,
Hmm.
um, really, really fun, interesting stuff. And as you might have heard, I mean, cyber is one of the kind of newer perils
Yeah.
that we started to see at my old company, and we started to see like, oh, we saw insurers looking for reinsurance to protect themselves against big cyber losses. And
Yeah.
then I think we did have a little trouble like quantifying, like how do you quantify cyber risk, because it's such a unique peril. It's the threat landscape of cyber is always changing.
Uh,
1 minute the threat actors are targeting a certain demographic, and then another minute there's different geopolitical um movements
Changes.
and
Yeah.
sentiments. Yeah. So then I came across this company that I'm currently at now, in Bermuda, and it's Envelop Risk.
Hmm.
And the cool thing about Envelop was that we have this internally developed AI cyber machine learning model that we use to underwrite and price these reinsurance policies, and that we use to manage the volatility. And the key thing is really to like understand the tail, which for reinsurers is really important, tail risk. So
Mm.
like these big events that can impact, multiple companies and really cause a huge, quite a systemic impact. And so I thought it was really interesting, and I made that switch.
Question for you. We did something on tail risk a long time ago when we were
Mhm.
looking at CRQ and some other things. So would you remind the audience what tail risk is and what it entails?
Yeah, sure. So tail risk is, I think it's the basic thing about it is when you there's a okay, so events can happen in a probability distribution. So you
Hmm.
can have an event. I'll just use cyber as an example. An
Yep.
event can impact, one company or two companies, and the probability of each event might happen. There's a distribution of probabilities. So when you think of tail risk, you're generally thinking like, okay, when you get to these really kind of low probabilities, what are the chances of a big event happening in that distribution? So
Yeah.
reinsurers in particular are they're quite interested in these more like less likely outcomes that can be quite damaging. So that's
Yes.
when we think of systemic risk. So for cyber, for all these perils, you're as a reinsurer, you're typically looking at 1 in 100 year events, 1 in 200, like these really big probabilities, like sorry,
Mm-hmm.
these really low probabilities that can have really high severity, and you have to manage that carefully as a reinsurance company.
Yeah, so like a big cloud outage that affects some portion of an entire cloud for weeks at a time potentially
Mm.
would be a cat. That's kind of a big cat consideration, right? Catastrophic
Ex-
consideration. Yeah,
exactly. Like, so something like that, the worse it gets, it's less likely, right? But then
yeah,
the impact can be quite, generally, like the severity of it would go, be quite high. So we have to think about these, and really it's also, especially with cyber, the key thing with cyber is, so it's not like a hurricane risk where we broadly know a hurricane and the parameters of a hurricane. We've
yeah,
had so many hurricanes, but with cyber, the cool thing is these tail events, like they're always different. And so a
yeah.
human can't always, you have to really, if you're really in the game of studying like tail risk for cyber, I really think you need to look at these unknown unknowns. And that's where for us at Envelop, using our kind of machine learning AI model, which generates the events as opposed to us, say, humanly defining them or defining them based on
Yeah.
um previous events, really comes in handy, because you cannot even looking at the recent history of our, like the little events that have happened. If you think of CrowdStrike,
Hmm.
no one could have really thought of that. And I remember post CrowdStrike, all the scenario based models had to kind of reparameterize and account for this new type of non-malicious accident, right?
Yeah.
So yeah, it's all about studying the tail risk and coming up with the best ways to quantify that.
Yeah, and it's hard to determine how much that's going to impact your brand reputation or the lawsuits that could come from that. I mean, the list is so long, and that's what makes the tail so difficult, I would imagine.
Oh yeah,
Oh,
there's a
yeah.
lot of factors when you get up into those high tail events.
AJ, the one thing I've learned, because I'm from the resilience space, over in business
Mm,
continuity, and that's what core infrastructure. But about 3 years ago, we kind of crossed over in our core in our business, and learned a lot about insurance. And cyber insurance is interesting because it is relatively new compared to property or casualty,
mm-hmm.
and we're still learning the various elements and the risks associated with cyber, and it changes, like you said, so frequently. But the thing is it is unveiled what risk really is, because the cyber is a way you conduct business. So it's a reflection to access to the business. So it's uncovered the business continuity aspects, which gets us to a much bigger risk management. So by default, cyber has kind of opened the door to risk management and having to learn that, especially from a small business perspective. Cyber may be your core to your lifeblood to running a business, because that's your entire your website is your business. Maybe does that ramble
Yeah.
make any sense,
No,
AJ?
it makes perfect sense because I think if you just go back to some other like just like hurricane or wildfire, like there's not as much you can do from a risk management perspective, although granted now there's a more important focus on that too. But
Yeah,
cyber has always been, since it's been kind of prevalent, like let's focus on there's a huge element of risk management as well. So,
yeah,
detecting the threats and then reducing, like patching, for example, because
yeah,
the only peril that I know of that you can have a big cyber event, but you can actually reduce the severity by like how fast you're patching,
yeah,
whereas in a hurricane, once a hurricane happens, like you can't just bring down the loss number. Like it is what it is. But even post event, which is cool, cyber, the loss can come down if you're patching really quickly or if you have these good risk mitigation things. So cyber has always been about, this holistic view of like, let's look at the threat actors, let's try to, all these different aspects of it, which now some of the other perils are starting to, out of
mm,
sheer need, like they're starting to have some focus on that too. But the good thing about cyber, because it's a digital peril,
yeah.
there's always been that focus there.
Interesting. So I heard you mention AI, and it sounds like your
Hmm.
firm is very expert in the employment of AI. How does AI start to figure into all this? Everybody wants to talk about it's being used by the bad threat actors as an offensive weapon, and also from the defensive weapon. But there's a lot of other applications for AI. Is that true? It sounds like you're using it and employing it differently than some.
Exactly. Yeah. So, I mean, yeah, since the last couple of years, right, with the proliferation of the large language models,
Mm,
there's been a lot of, talk, especially in the cyber space, about AI and the threat actors and how we need to, really be worried about this new threat. And that's all true. We've already seen just, with the large language models, like it makes it much easier for social engineering attacks to happen, and those can impact, very small businesses too. So just even, someone can go in into the like large language models and just type something in and translate like their language much easier. So then it can make, phishing emails like much easier to deploy, things like that.
yeah,
So that's already started. And as as the AI models proliferate, things will likely get much more sophisticated. For now, they're still not too bad, but there's there's always a countermeasure, right? And so I think what we need to remember is that we can use these same technologies to, detect the threat actors and to, track them and to capture them even. So it's not necessarily something to be feared, but what we do need to do is also like use them as well on our side to protect ourselves and risk mitigate. There's always going to be like cyber incidents. I think that's for sure, but it's
yeah.
about using the tools to help protect ourselves.
Yeah. So if I run a business. I'm in Tulsa, Oklahoma. It's a metal stamping operation, and we have $50 million of revenue.
Hmm.
What do I worry about? I mean, you seem to can break it down and saying, hey, as a business person, this is what you really should think about. This is what you should focus on, and forget about all the noise, all the buzzwords, all the other things. Just here are the basics you really have to think about in terms of your business. What would you recommend on that type of a discussion?
Yeah, so especially like, yeah, as you mentioned, if you're getting into the smaller end of the SMBs, like 50 million revenue or even lower, I think firstly can't ignore that you need like a proper risk management strategy.
Yeah,
And even I'll just use cyber as an example. Like I know I've noticed a lot of the smaller companies, they think that they aren't going to get impacted by like cyber attackers because they're smaller, mom and pop shops, for example.
yeah,
But unfortunately, what we're seeing is even the smaller companies, like they're actually getting impacted quite a bit by, like unsophisticated cyber incidents, but these incidences can actually, especially the smaller company size you are, like they can kind of really do a lot of damage. They might cause some severe BI losses, business interruption losses. But
yeah,
the worst part about it is if you're smaller, you might not have enough cash reserves to kind of get back and running. So a
yeah,
cyber incident can really damage you. So I think just understand your risk. And one thing I learned is, even these smaller companies, like business email compromise has been one of the biggest things that impact these small SMBs. And so
yeah.
then it's like look at your risks and even invest. It's worthwhile to invest in things like training your employees. And I do think obviously a key part of that, well, sorry, training your employees, what tools might be right for you to mitigate the risk or reduce the risk,
Yeah,
proper backups and things like that. And then also another key piece of it is insurance as well. So cyber insurance, is it covering what you need? Like, will you be able to, restore, like, get enough money to cover your BI losses? And I think, yeah, taking a holistic view and not ignoring, like, just because you're smaller doesn't mean you're immune to these things.
well, given the interrelationship of how cyber kind of fits into everything, do you think that the policies for cyber are going to become heavier, more heavily weighted towards the interruption component, the business interruption, or they're going to be beefing that up over time, or has that already happened?
Well, I think from from my knowledge, the cyber insurance policies have generally remained the same over the years. However,
Yeah.
due to the different cycles in the insurance cycle, so what's known as hard market and soft market,
Okay.
depending on when there's a lot of losses and different pricing factors, the BI component, like so right now, for example, we're in a bit of a soft market, so it's actually quite good for the actual policyholders. So the companies
Yeah.
themselves, they're in a favorable position to get a bit more coverage on your business interruption side than would be in the past. So you'll probably get a little bit of a cheaper policy currently, or more coverage than if you were looking, say, 3 years ago. So it's a bit of a
Yeah.
cycle. So yeah, right now is a good time to get a little bit more bang for your buck. There's definitely a focus though on general. There's been a few like little losses,
Yeah.
some small events over the last, I don't know, 2 years, I would say, that brought a bigger focus on BI and business interruption because that's key for everyone, right? The insurers, the
Yeah.
reinsurers, and then the companies themselves. Like if you can really get a mitigate your BI exposure somehow, then you're pretty much like under the current threat landscape up and running pretty well. Ignoring breach, which that would might impact some larger companies that have different kind of data stuff, but yeah.
Yeah. Well, let me ask you a question. So I would assume that insurance and the reinsurers are aligned on most things, but does is there an event, a cyber event that would keep one awake and not the other, or are they one
Yeah.
and the same? What would that event look like? Just curious.
Yeah, so they are generally aligned. Like the insurers obviously want the reinsurers want the insurers to do well. So, they want to make sure that they're doing proper
Yeah.
insurance risk management on their side. But there are cases where the reinsurers are not they're not as impacted, for example, and I'll give you
Yeah.
just in the real world. So there was the
Yeah.
recent Hurricane Helene and
Hmm.
things impacting Florida. So
Yep.
those unfortunately had an impact obviously on the homeowners and the impact on the insurers that were still in Florida. But because they weren't high enough, like large enough, they didn't really get to the reinsurance layers. So
Ah,
for in that case, the reinsurers were not really as impacted and were kind of
yeah.
relaxed a little bit about it. And then, but generally the way it works is if there's a big loss that impacts the reinsurers too, then the insurers unfortunately will also be impacted because it's kind of like it's what's called a risk transfer chain. So
Yep.
at the bottom of the risk transfer chain, you see like the companies or the homeowners, for example, or the people, and then one level above it's the insurers, and then one level above, it's the reinsurers. And then sometimes, depending on the risk at the top, it's the ILS, the capital markets that also are usually
Yep.
a little bit above there too. So yeah, it's this whole chain. And so if something hits you on the bottom, that's so bad to hit you at the top. So if
Yeah.
it's so bad to hit you at ILS, then generally like yeah, it'll go move all the way up to the top, but it might not always go up to the top if it's the smaller risk or smaller loss.
Yeah. So it acts like an airbag almost. It absorbs some of the pressure. That's what the reinsurers do, and they help make sure they absorb some of the risk, I guess. Yeah.
Yeah, exactly. So how reinsurers work is we spread the risk around. So there might be one company that buys like cyber insurance, but many reinsurers will take a portion of that policy.
Yeah.
So then we spread it around because it's so catastrophic in nature. That way one reinsurer wouldn't take that burden. So
Yeah.
it's a spread of the risk. Yeah.
Yeah, and with the use of AI, you can really cover a lot of ground pretty quickly. So I hear you. Recommendation is potentially embracing the use of AI as don't treat it like an enemy, treat it like a friend.
Yeah, yeah, exactly. Like don't fear it. A lot even right now it's pretty much better used with people. There's it's that's the best way right now. And don't fear it. It has a lot of benefits. It's just a tool in the
Yeah.
short term, and really like it's still gonna like if you don't embrace it and if you don't learn how to work with it, like it's still gonna like happen and grow on its own. So it's like you're gonna just be left behind because of fear. So I think there's a lot of cool tools available
Yeah.
as well, even on the cyber side. So for example, even for the small businesses, SMBs, a lot of the cyber insurers are now they're coming up with sort of like digital platforms. So if you buy a cyber insurance policy and you might get access to some of their platforms, which gives you some different tools. And some of those will be like AI based tools. So, tools to
Yeah.
help detect what's going on in your system and your network and like what you need to patch and things like that. Or even, if you're maybe some training separately about, business email compromise, for example, you just have to take like a holistic view, right? So, when
Okay.
you think of, yeah, your risk isn't just like there's not just one aspect of a good risk management strategy. So
Yeah.
I think I've heard that some small SMBs will just buy a cyber insurance policy and then they consider that that's their risk management strategy and
Mm,
like that's
mm,
done and dusted. But
yeah.
I think you got to just look holistically so that for in cyber, for example, that comes down to, what tools are you using to risk mitigate or how are you looking to reduce your BI, what training your employees should get, like do they know about proper like how to avoid a phishing attack? Do they know about social engineering? So training is a big thing. And I mean, understanding your exposures is another key thing. So again, some companies might have sensitive data, for example, and some might not. And then unrelated to that, buying the appropriate, say, cyber insurance or just general insurance policy for your needs is another piece of it, right? So you got to do all of them and look at your company and your enterprise and what risk you're facing and what's right for you.
One thing that I should do today, what would that be?
I would just say take a good look at your overall enterprise risk management strategy.
Mm,
Um, I think that's key, and that might mean, you know, that could mean a lot of different things, but you got to take a holistic view, and you can't ignore it. And don't think that cyber like insurance is enough. I think that's also the other takeaway.
Excellent. Well, AJ, you've been a delight. Really appreciate it, and your advice and your insights are going to be going to help a lot of people around the world. So thank you for joining us on the Safe House today.
Oh, thanks, Jeff. Loved it.
Oh, you're welcome back anytime too, because there's a lot more subject in there I think we can dig into. If you're willing to do that, we'd love to have you come back.
Definitely. That'd be great.
All right. Well, have a great day.
Cheers. Thank you. You too.
That's our podcast for today. I'm Jeff Edwards for the Safe House Initiative. Thanks for joining us, and remember, be safe, be resilient, and be kind to each other. For more information about the Safe House Initiative, please use your mobile device to scan the QR code on the screen, or send us an email at info@safehouseinitiative.org, or visit us on our website, safehouseinitiative.org. We look forward to hearing from you.